You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose. Welcome to Masters in Trading Live. Masters in Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time. We'll go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I've done nothing but trade my entire career. I'm out here in Chicago. I've traded at all the major exchanges, the Chicago Mercantile Exchange, the Chicago Board of Trade, and I really learned how to trade options and value options to the penny at the Chicago CBOE, Chicago Board Options Exchange. I got the chat open. Welcome everybody. We are going to do 3 days of earnings. We've been trading earnings the exact same way since I started Masters in Trading in 2015. I had a very difficult time trading earnings before I was a market maker, but once I learned how the floor traders were trading earnings in 2011, I was blown away. I had my aha moment, and I have traded earnings this way ever since. So we're going to go over 3 days of earnings. I also noticed something. We are getting a lot of YouTube traffic because of our latest video on drones, specifically on the ticker KTOS, K-T-O-S, Kratos Defense. So I appreciate all you guys visiting the channel. I'm going to go over earnings, but I'm going to go over an example using KTOS, and we're going to value KTOS going into its earnings this quarter. So I got the chat open, guys. Appreciate everybody being here. Let's go over the slide deck. I'm really looking forward to the next 3 days of videos. Look at that guy, one finger up. Earnings set up every year. We literally do the same thing every year. It's just rinse and repeat. Before I get to that, I want to give a big shout out to Sage. Sage is in our community. Surgery went well. They say I'm doing well. Sage had open heart surgery. I believe it was July 11th or July 10th. So Sage, so glad you're doing well. Thank you for sharing. That is really, really awesome and great news. Also, very, very cool news. Eddie has been with me since 2019. My guy makes it another year. Eddie is in our chat. Glockenspiel for Eddie and for Sage, guys. Thank you. Glad you're doing well. Eddie, happy birthday, my good friend. All right, guys, let's get on to the earnings. The smart way to trade earnings. Why do I call this the smart way to trade earnings? I call it the smart way to trade earnings because these are the results. We are under regulation. Every single trade that we ever share is timestamped. Our Earnings Advantage program, okay, these are all documented trades. These are all timestamped trades. I just want to show you why it's such a smart way to trade. We've had 41 trades in the last 18 months. We've had 28 winners. Guys, we are buying options. When you buy options, usually you're not going to have a win rate over 50%, but we've had a win rate over 65, 66%. These are incredibly consistent trades. The average days that we've held our earnings trade, 33 days. And the average gain, guys, per trade on all documented trades is 40%. That's why I'm sharing with this. That's why we're calling this the smartest earnings trade that I know. Here's what we're going to learn, guys. Again, we're going to go over 3 days. Day one, we're going to go over the biggest mistake traders make. Discover why most traders fail during earnings season and how you could shift your mindset from guessing to gaining edge. We'll cover the psychology, risk traps, and introduce the market maker mindset. Day two, guys, tomorrow, you're going to learn the exact system I used on the trading floor, and I'm going to walk you through the 5-step method to identify and trade mispriced options every single earnings season. On Wednesday, guys, we're going to leave you with an actionable earnings trade. I need you to watch the 3 days of video because the actionable earnings trade, you're not going to understand without going through the education. So we'll wrap up with a complete trade idea you could take action on. We'll include the strike, rationale, and position sizing. Most important, guys, the rationale. Why are we in a trade? Okay, that's what we need to explain. I want traders to write down the reasons of why you're in a trade. Okay, retail traders struggle with earnings. Many people trade based upon company fundamentals, not the options pricing. The market already knows the story. The opportunity, the edge, is in how options are priced. Retail doesn't understand implied volatility. Implied volatility determines how much movement is priced into that stock. They risk too much without a proven edge, and they rely on prediction instead of probability. We are going to rely on probability, guys. We are not going to rely on prediction. My turning point, guys, I used to gamble on earnings. I was excited. Stocks move a ton, but now I realized that I was gambling. Again, once I learned the system, everything changed when I was a market maker. People were making fun of me on how I was trying to trade earnings before I learned how the market makers were trading earnings. We're analyzing earnings how institutions do, and that approach became the foundation of what's now the Earnings Advantage program. Let's get into Shoutouts. Now, Shoutouts is a defense company. It's a drone company. Symbol KTOS. And we're going to use this to go over the earnings for the third quarter, of 2025. So here we go. Shoutouts has released earnings. I think this company is about 5 years old. So Shoutouts has released earnings. If they're 5 years old, every public company releases earnings 4 times a year. 5 times 4, they've released earnings, say, 20 times. When a company has released earnings 20 different times, market makers, the analysts, they start to get comfortable with the information that a company is going to share during earnings time. Think about Apple. Apple has released earnings 500 times. Apple is the most perfectly valued stock in the world. It's got the most liquidity. It's got the most market makers following it. It is a very, very well-valued stock. That's why Apple doesn't move 20% after earnings. Apple moves 3% higher, 3% lower, 2% higher, 2% lower. In front of you, I have the last 6 earnings releases of KTOS. May 7th, they released earnings. The stock was down 7%. February 26th, they released earnings. The stock was up 6%. November 7th, August 7th, May 7th, certainly don't need to go August 7th again. I just wrote the wrong date. This was before it, but the last 6 times Shoutouts released earnings, that's how much the stock moved. One time, 6 times ago, it moved 21%, but after that, it's moved under 10% each time. The average of the last 6 earnings moves for Shoutouts is 10%. We need to use that information to determine how much Shoutouts is going to move the next time it releases earnings. That's the information that we want. So I'm going to go to the next slide. This is important. Average 10% move after earnings. Actually, let me ask you guys a question in the chat. If Shoutouts moves on average of 10% after its last 6 earnings, how much do we think it's going to move this earnings? What do you guys think? How much do we think it's going to move this earnings? If it moves 10% every single earnings or earnings for the last 6, I think it's probably appropriate for us to value Shoutouts at, say, 10%, right? Why should we think it's going to move 5%? Why should we think it's going to move 40%? Probably not. I think the market's got a pretty good understanding of this stock. So now, here's Shoutouts. Here are the options pricing. So Katos is trading $50, last price. Right now, we need to determine how much movement the options are pricing. Here's how to do that, guys. You see this number? 7.95. And here's the stock, right? 50.95. If you take 7.95 and divide that by 50.95, you're going to get 15.6%. Right now, the market is valuing Katos at 15.6% movement. Katos historically moves 10% on its earnings. What do we think about that pricing of Katos? What do we need to know? There's 32 days until expiration. Earnings are in this expiration. The market is valuing movement at 15.6%. Katos only moves 10%. It's too expensive. Ernie, excellent. Ernie here, too expensive. Chandra, too expensive. Rick, he notices the strong upside skew. What does that mean? Rick, good comment. $10 higher, 60s, $1.10. $10 lower, the 40s are only trading 50 cents. Katos is skewed to go higher. But the options are too expensive. Too expensive. This is not an earnings trade that we want to do. Okay? If Katos was trading at 12%, 11%, 10%, 9%, man, if it was at 8%, it would be a screaming trade. If it was at 9%, it'd be a screaming trade. But right now, Katos options are valued at 15.6%. The average move for the last six on the floor, we say six because you can't say six like this. You got to say six like this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's for a different topic. Katos is too expensive. Okay? Hopefully this makes sense, guys. This is how we value earnings every single earnings season. And the reason why I say this is the smartest earnings trade that I've ever come across is because of the consistency. And this is for the last 18 months, 41 total trades, 28 wins, 68% win rate, 33% average return. It's actually a 40% average return. We're going to do 3 days of these videos, guys. We're also going to share our first 2 trades with our earning advantage earnings advantage group right after this video. If you guys would like to join and hop in there, it's mastersintrading.com/earnings advantage deal. What I'm going to do now, like I do always on these Masters in Trading Live, is we always talk to everybody. We talk to the free community, and then we switch over to our all access, and that's where I'm going to share 2 actionable earnings trades right now. If you guys have any questions, Chris Warder, our lead editor, just dropped the phone number. Give us a call. I got my guy Tristan standing by. Telvin is our video man, and it's his birthday too. So happy birthday, Telvin. Everybody in All Access, you guys sit tight. We'll be right back. Thanks everybody for watching. Make sure you give a thumbs up and subscribe too.